But I would now like to introduce Dr. Nuno Sapateiro. Dr. Nuno Sapateiro is a professional partner at Abreu Advogados in the finance practice area, and he's also the coordinator of the insurance law team. Dr. Nuno Sapateiro will make his presentation on the licensing principle applicable to insurance law.
Okay. Good morning to all. Firstly, I would like to thank also Professor Dário Moura Vicente, Diogo Pereira Duarte, and Rita Granadeiro for the invitation to be here. It's really a pleasure to be here to attend the conference, and also a pleasure to have the other keynote speakers that are part of this panel to speak about something that, in my particular case, it's very interesting for me, and it's been one of my key roles as a lawyer for more than 15 years, which is to talk about insurance law. I would say that 5 years from now, I had to make a kind of a switch in what respects my specialization in what respects insurance law, and to look a little more into technology, and to look into a little bit more on InsurTech, because times have changed, and although the law itself has not changed to accommodate the situation that we have nowadays, one of the key challenges that I face as a lawyer nowadays is to look into the law that we have and to see how we can accommodate the changes and the new players that are entering into the market, and to see where they fit in the law. Because we cannot just say to, for instance, to an InsurTech that you cannot play in the Portuguese market, or you cannot be a source to an incumbent insurer, because there is nothing in the law saying that you are regulated or non-regulated, or you can play in the market. But we need to look into the law and see where they fit and what they can do, if they need to be licensed or not. And I would say that for me, as a lawyer, that has been the big challenge in the last years, is to, when we are reached by a client that wants to go into the market, and all of them usually say, I think that I'm exempted, I think that I'm under the exemption, because everyone wants to be under the exemption, not to be under the capital requirements, not to be under the governance requirements, not to be under the disclosure requirements. And that is usually a difficult approach to make, because the law, when it comes to the exemptions, is not also very clear on the side of the insurer, and also on the side of the insurance intermediary, nowadays called distributor. So to start, the start is the presentation. I have here what we could say that under Portuguese law are the main sources of insurance and reinsurance. For those that are more used to deal with insurance, the first and the third bullet should be familiar to those that are more related to insurance at the EU level. So the first is the insurance and reinsurance law, which is the key law in Portugal to govern the activity of insurers and reinsurers. And this is the law that resulted from the transposition of the Solvency II directive. Then we have the insurance contract law, which is the only one from these three that is not the result of a transposition of a directive. And the insurance contract law, as is mentioned here, is the one that determines the main rules applicable to insurance contracts. And then we have the third bullet, which is the insurance distribution law, which is the one that also, very familiar to those in the insurance market, made the transposition of the IDD, which is the directive that regulates the insurance distribution. As you can see, and this is one of, I would say, this is one of the main topics that I usually detail when I speak about whether or not our laws are updated with the reality that we live, is the fact that, and this is clear when you look into it, the Solvency II directive is dated to 2009, and the law on insurance distribution, on insurance and reinsurance law, is dated of 2015. So. And when you do the same exercise for the insurance distribution law, you see that the directive is 2016, and here we were more, let's say, more compliant. The law is dated 2019. And this leads us to a problem, which is the usual problem that we have here, and that could be the discussion here for InsurTech solutions. When we come to since we need to have a single market, we need to have other insurers and other intermediaries passporting from one country to the other. We need to have a single market. We need to have at least similar rules, or because there is margin for each EU state to make changes to these rules. But that, as a principle, these are the guidelines, and the principle is that we have insurance, reinsurance, and insurance distribution laws similar in all EU countries to have a single market. The point is that if we have a directive of 2009 that is subject to discussion at the EU level, then it's transposed. Then there is a transposition period. Then when it comes to Portugal, there is discussion again. We need to hear the supervisory authority, we need to rehear the representatives of the insurers, we need to hear the representatives of the brokers, we need to hear the consumer. In the case of the insurance distribution law, we had to hear the data protection authority. So, and when it comes to such a long-term consultancy period, it's inevitable that the law, when it's transposed, is not updated. So, okay, so, and this is the first point that I would like to point out is, if for some instance we have now, let's assume, a directive that would regulate insurtech solutions in the EU market, I'm pretty sure that if we could achieve the same time frame as it was achieved for the insurance distribution law, and this was already a great result, it would take three years to have it in force in the market. So, and maybe in 3 years, the insurtech solutions that would be covered in law would not be updated again. So, and then we would enter the same discussion again, because we need to go for a process that is the result of a transposition of a directive. And so I think this is pretty much the reason why we are seated here, because we cannot have laws and regulations that are updated with the situation, at least with respect to technological solutions. And we need to find in the law, and this is something that that lawyers and students of law like a lot, which is to find look into the law, make an extensive interpretation, go to an coverage, a gap in the law, and to find a solution. And this is why we usually need to deal with this, and this is why the law is never perfect to deal with the market, in particular the financial market that is dealing with this technological revolution. As you will understand from my presentation, it is inevitable that I will touch points that were already touched in the capital markets and in the banking law, because the financial markets, these three sectors are part of the financial market, and although we have different supervisory authorities, and although we have different regulations and laws, the fact is that these three regulators work in coordination. These three regulators are part of the financial market. And some years ago, it was very typical to have bankings linked to insurance companies. Fortunately, in my opinion, this is something that has changed during the last years, because I'm of the opinion that banks and insurance companies should not be part of the same structure, so they should be separated. They should, because what I've seen in the past is that sometimes it could trigger issues in the perspective of having insurance companies buying debt of banks that are part of the same group, or using part of capital as collateral, something like that. So it's really important for me, since we have different sectors of activity within the financial market, to have these sectors separated. And what experience has shown nowadays is that we have long-term distribution agreements, bank insurance agreements between insurance companies and banks that work pretty well, and that's from the moment that they are separated. The collapse or a solvency issue in a bank does not mean that the related insurance company would also be affected, and the same works on the other side. So this is the process that we are seeing, and now, and that is why, and now jumping into the next slide, I wanted to put you aware of what are the typical authorized entities to develop insurance and reinsurance business in Portugal. You will see that some of these are more common, and the other are not that common. So I would say that the most common in the Portuguese market are the Portuguese-based insurance and reinsurers. Then we have, in jumping into the third bullet, the branches of insurers and reinsurers with a head office in other EU countries. So this is the freedom of establishment. And then the fourth bullet is insurers and reinsurers established in other country acting under the freedom of services, which is also the typical passporting right. So the first, the third, and the fourth bullet would be the main players in the insurance and reinsurance market, and the ones that have the biggest stake in the underwriting risks in the market. Then, in the second bullet, we have the Portuguese-based mutual insurance and reinsurance undertakings. And then here, when we move into these three last bullets, these are not that common. The branches from third country are not that common because since they are from a third country, the Portuguese supervisory authority cannot rely on their passporting right from other EU country. They are not subject to the same regulation, to the same solvency requirements, and so to establish a branch from a third country is completely different from establishing a branch from an EU country. Then we have public insurance and reinsurers, incorporated in accordance with Portuguese law, dedicated to insurance and reinsurance in conditions that are equivalent to those of the private sector. And then the last is the ones that are incorporated in the form of a European company. As you will see, the types of licenses in the insurance sector are more limited than those applicable to the banking sector, but for the moment, these are the licenses that we have, and I think that they are sufficient to deal with the market that we have nowadays, and this is pretty much in line with the other EU countries. Now, going to the next slide, this is the slide that, at the end of the day, I think this is the trigger. So when you look into an insurtech company, a startup, you should discuss whether or not they are a regulated entity. And to discuss whether or not they are a regulated entity, for sure, you'll just not, the solution is not only to look into the definition of a regulated activity, but I would say that this is the main trigger to see what is insurance activity, what is insurance distribution, and then to see if there is a link between what they are doing and this definition. So, as you can see, this is pretty much what you would expect to read. So insurance activities is an undertaking liability, is an entity that undertakes liability under the contract of insurance to pay damage or compensation to insured persons upon the occurrence of an insurance event. This is not mentioned here, but of course the trade-off here is to pay the premium to the insurance company. And then when you come to insurance distribution, and this is a pretty much recent definition to the extent that it was transposed by the IDD, it's the advising or proposing or carrying out the work preparatory to conclusion of contracts of insurance or concluding such contracts or assisting in the administration and performance of such contracts. The key element, although it is not referred here on insurance distribution, and this is something, the issue that is usually raised when I'm reached by a client that wants to understand if he's under the regime or not, is to understand whether or not he has communication with the client. So you can, if you have communication with the client, that is usually a trigger to be under a regulated activity to the extent that you are presenting or taking any action for the presentation or sale of the insurance product. The reason why I've put this third definition here is because nowadays, and based on the Portuguese market, this is usually the solution that is being considered by insurtech startups to enter the market. So they don't want to be, outsourcing can also be include or involve a regulated entity. But as a rule, the outsourcing is a solution to have an insurtech startup cooperating with an incumbent, providing solutions, but not being a licensed entity to the extent that a regulated entity, to the extent that they are not taking the risk. They are not placing the product, they are only providing the technological solution to the player. So there is an arrangement here between the insurer or the reinsurer also with this service provider to provide this service or activity. Then, and we will go to this point later, there are limitations here for sure. And then there is a definition in law which is the critical or important operational functions. And then when we enter into, and once again, this is an open definition, if the outsourcing arrangement for an insurer involves these critical or important operational functions, then the regulator is supposed to jump in and to see on whether or not the insurer is outsourcing services that cannot be outsourced, or because they trigger risks for the consumer, or because they are entering into the regulated activity, and this should not be part of outsourcing arrangement. Now, now we enter into what we would say the approach to InsurTechs. So, as I was mentioning before, InsurTechs can decide to act as non-regulated third party under the outsourcing arrangement, providing that they are not providing a critical or important operational function or activity. One of the discussion is whether or not using cloud services would fall within this definition of important operational functions or activities. And then such arrangement should not lead to certain risks. And this is a little bit what I have mentioned to you before. So the outsourcing arrangement cannot materially impair the quality of the system and governance of the insurer, cannot increase the operational risk, cannot impair the ability of the supervisory authority to monitor the compliance of the insurer, and cannot put into risk the satisfactory services to policyholders. So at the end of the day, outsourcing is not something that is, although the criteria of important operational functions or activities is once again subject to different interpretation, and that's when we jump in and this is the client, there is always margin for the regulatory authority itself to make its interpretation of these operational functions and to jump in and to see what is being done. And one thing that is important also here for InsurTechs is that they should be aware that when they are providing outsourced services to insurance companies, they are themselves subject to cooperate with the supervisory authority. So they are not out of the scope of the supervision. The supervisory authority is itself entitled to make on-site inspections to an entity providing outsourcing services to an insurer. So it should be clear that this scope of the law gives margin for the insurer to look into the service that will be outsourced and to decide on whether or not they should do it and whether or not these entities should be regulated or not. But they should be aware that the supervisory authority itself is also allowed to jump in, to go there and to see if the outsourced service should be regulated or not, or if they are providing a service that is important or critical, and that could trigger risk for the consumer. One of the things that is usually discussed is, as you can understand, an InsurTech startup, the funds that are raised by the InsurTech startup are not, at least when they are created, are not dedicated to create solvency ratios or to create a structure or to comply with governance requirements or to comply with all other disclosure requirements that are usually associated with an insurance company. And that is why it is difficult, not to say impossible, for an InsurTech startup to incorporate, to become a licensed insurer, because that is not the goal of a startup when it is created. And then it is also worth to mention that during this first half of the year, the ASF, the supervisory authority, has even more strengthened the governance and the code of conduct applicable to insurance companies. So I would say that it is becoming each time more difficult for an InsurTech startup, at least for the Portuguese market. In the other EU countries and also in third countries, this has already happened, to have startups that have become insurance companies. But I would expect in Portugal that the rule is to have, at least for the time being, is to have InsurTechs acting as outsourcing companies for incumbent insurance, to provide solutions. And one of the solutions that is also being considered by InsurTechs, and I've seen that happening, is to go for these distribution activities. So to make themselves acting in the market as insurance agents, the regulatory requirements are much less demanding when compared to insurers. So as you can imagine, they are not taking the risk, at least the risk of the product, the risk of the client. They are taking the risk only of the distribution activity, which is also big. But when it comes to, when we look into the regulatory requirements applicable to an agent, and they usually go for an agent, not for a broker or an ancillary insurance intermediary, the requirements are much more or less demanding. So what we are seeing now is to have Some insurtechs that come into the Portuguese market as insurance agents, they help the insurers designing the product. They have a contact with the client in the sale of the product, notably through smartphones or through the internet or whatever. So they have this connection with the client. They take the liability for this sale of the product, but they do not take the risk of the product itself. So I would say that nowadays the two options that are being considered in Portugal is to have an insurtech as an agent, insurance agent, or to be an outsourcing service to an insurance company. And now in this slide, we have the question that was a little bit in the program of this conference, which is what we should consider is to erode the licensing principle or to have it restated and strengthened. For me, it is clear that erode the licensing principle is not an option. So the licensing principle is critical. This is the one, I remember in the last presentation we were talking about the protection of the investor, and this is the same as in the banking. It's not the protection of the investor, but this is the protection of the consumer. So, and the licensing is critical for this protection. So, and these 6 boxes that you see here are at the end of the day, the topics that we should consider here is the principle of proportionality, so it shall be observed consistent. So we should look into each case and analyze each case by case. Then there is this big challenge, which is balance between digital innovation and consumer protection, and we will see this in the next slide. So one of the things that I find it more difficult when I look into insurtech solutions is to see that the law is each time more demanding in information, due to information's disclosure in paper or in the rural mean. When we come into the unit-linked products, the requirements are even more demanding, and then we want to make a quick sale through a mobile or through internet, and then we need to deal with these information duties, and it makes more difficult. So this is the challenge, to harmonize innovation and consumer protection. And then this point, which is very much in line with all that I've said, so regulation and supervision should be technologically neutral and ensure a level playing field. So something that was already said here, so same activity, same risk, same rules. So this is what we should consider. Then, if insurtech activities involve the carrying of a regulated activity, the appropriate license is required. So that's what I've said in one of the previous slides. So if they fall within the scope of a regulated activity, they should consider taking the license. If they don't want to take the license, they should fall out of the regulated activity and be a kind of a outsourcing service or an agent, as I've mentioned to you. It's also important to say that both the Solvency II Directive and the IDD have provisions on activities that are under what we call the exemption. So entities should also look into the exemptions. The exemptions are difficult sometimes to be under the exemption, because the principle of the exemption is that you are under the exemption if you are not in a situation in which you will put the consumer into risk, and you are not putting the financial stability in risk. So if these criteria are fulfilled, and this is something what we call the connected contracts exemption also, which applies to insurance distribution, if you are under these situations, you may be out of the regulated activity. So then we have the current outsourcing rules that, in my opinion, cover the cooperation between incumbent undertakings and insurtech startups. And then this point, which is also something that I find it very important, and I usually mention when I have to talk about these matters, is it's not only the players in the market, let's say the insurance undertakings and all of them, that need to be technologically developed. The subtech solutions, and subtech is usually associated with supervisory technology, should also be on the side of the regulator itself. So it makes no sense to have insurance companies and agents that are technologically developed if the regulator itself is not able to follow that approach. Because one of the things that I can mention is that some years ago there was a change in the insurance contract law that forbidden the payment of the premium in kind. And this was related with the fact that money laundering issues, essentially because payment in kind of insurance premiums was usually adopted in life insurance. But it will come a time or not, in which we will be discussing the payment of the premium in cryptocurrency or the payment of the compensation in cryptocurrency. So this is, again, an evidence that it is impossible to look into the law and to have all the scenarios covered there, because some years ago we were concerned with the payment in kind. In some years in time we will be concerned about the payment in cryptocurrency. So this is something that we should consider, that we will never have a law updated to the situation, and we'll always have to find solutions with the provisions that we have. Now, this is pretty much, this slide is pretty much in line with what we have referred. These are some of the challenges that we have between the harmonization between the existing regulatory environment and InsurTechs. This paper requirement is still very much stated in the insurance distribution law. There is an alternative here for the durable mean, but when we come to make all the sale process through an app or through the internet, and when we look into these requirements of paper that are still pretty much stated in law or durable means, this is one of the challenges. The other one is the one that I've mentioned to you before. So the list of information duties that has to be fulfilled when you are selling a product, and it becomes even more strict if we are dealing with a complex product. It is one of the challenges that we need to do, is how to make a quick sale that is attractive to the consumer and complying with all the information duties. And then look, the other two topics are, the other two boxes that we have here are the ones that are typically related with online sales, so data protection and cyber risks. These are, I usually say that insurance companies will also have to buy a cyber risk insurance for themselves if they want to enter into if they want to really be technologically developed. And then jumping into, and sorry, I did not switch, but this was at least what I was talking about, so these 4 windows on the challenge triggered by the harmonization. And then going to this last slide, this is, I usually, when I need to explain why InsurTechs should think twice if they want to jump into the regulated activity, is because this is not everything, but this is some of the compliance duties that insurance companies, and some of these are also applicable to insurance distribution, they have to deal with on a day-to-day basis. The IFRS 17 will apply from 1 January 2023, but it will already be reflected as from 1 January this year. So, but all of these that is reflected here are compliance rules that are linked to reporting and disclosure requirements that shall be observed by insurance companies almost on an annual, on a quarterly, on a half-year basis. So this is why there's the question here: is the market able to deal with the pressure resulting from insurance regulatory and licensing requirements on InsurTech? So are insurance companies ready to have 3 or more, 1, 2, or 3 more boxes here related with their relation with InsurTechs to put more pressure on regulation? Or should we wait to see where the market stands, because Portugal is still a market, underdeveloped market in what comes to InsurTech when compared to other EU countries, and then to decide on whether or not we should put more regulation on InsurTechs. And then, before ending the conference, I just wanted to make here some conclusions here. So, as I've mentioned, I think that the licensing principle is critical to assure financial stability and consumer protection, so I see no margin to go beyond this. Most of the legal and regulatory changes that we have been experiencing last year are aimed to strengthen the financial stability of the players in the insurance market and to assure consumer protection. So I see no margin to make the licensing principle weaker or to open the door to non-regulated entities if we want to achieve consumer protection and financial stability. We have already very strict conditions for the licensing process, so the fact that we are dealing with this single market puts even more pressure on having a licensing principle that is strict in what regards prudential rules and market conduct rules. And what I think is that intervention of InsurTech should be analyzed on a case-by-case basis in when it comes to licensing. So we need to see what is their legal status, what is their nature, what is the size, what is their main activity, and whether or not we can apply an exemption to one of these players. And then, and this is one of my last remarks, I don't think that we can have two classes of insurance companies, those operating under a license and those subject to a partial license, okay? So there is no room for that in the law nowadays. So what we can have, and this exists in law, is to have non-regulated entities that nevertheless need to comply with some rules that are in the laws governing insurance activity. And I will end with a reference that was in the recent report from the European Insurance Supervisory Authority, which is the EIOPA. And one of the things that was in that report is that facilitating innovation is not about deregulation. Okay, thank you very much for your time.